This is Why Commodities with James Cordier. Hello, I'm Joe Partavilla from Forbes Books, and we have another jam-packed episode. James, how are you, sir?
Doing well, Joe. Things are good down here in Florida, and looking forward to the podcast today.
Yeah, and we have an old friend of yours today. His name is Phil Flynn. You speak very highly of him behind the scenes. So before we bring Phil on, tell us a little bit about him. We all know that he is a senior energy analyst at the Price Futures and is a Fox News business analyst. So tell me more about Phil.
Phil and I have had conversations going on at least 2 or 3 decades now. I met Phil several years ago in Chicago, and he was primarily one of my favorite go-to energy analysts and traders in the market. And we did meet at some point, and we've been exchanging ideas ever since. Phil is certainly one of my people that I go to when I'm looking for information. And from quite often, certain times, we discuss ideas. And today, it's just a real pleasure to have him on with us today. It's really great.
Awesome. Well, without further ado, Phil Flynn, welcome to Why Commodities. How are you, sir?
Hey, gentlemen, it's great to be here. It's great to make American energy great again. Woo-hoo! I'm all excited.
All right, slow down, Phil. We're going to get to that in a second. Before we get into all that, though, we always like to share our origin stories of how we got here. You're an energy guy. So outside of like me in comic books and someone being struck by lightning and then having some sort of superpower, how did you become this go-to guy for James Cordier and for the rest of the world when it comes to energy?
You know, Joe, I have no idea. It was a long time ago. But no, I started down on the trading floor. And it's kind of weird. Even when I was a kid, I had an interest in oil and gas because I thought, oh, man, that's how you get rich, oil and gas. I mean, you watch the Beverly Hillbillies, you shoot up some crude. You know, I was digging in my backyard to see if anything would come up. So far, not, but I'm still drilling, right? And but it's kind of crazy because I've been in the futures industry longer than they were actually trading crude oil on the futures industry, right? So they started trading it back in 1983. So it was a new market. It was a niche market. A lot of people, believe it or not, were covering this market. And so I saw a niche. I really got an interest in it, learned whatever I could, started to put out a market letter, and, the rest is history, so to speak.
Wow, that's pretty awesome. And so where did you cross paths with James? James mentioned in Chicago. What first impressions of James Cordier? What were you thinking, like, who's this guy? What's with all the commodities and all these he's talking about? Tell me about that first meetup.
He's a damn good looking guy. That's number one, right? You see the guy, he has a presence in the room. And I actually knew him years ago on the speaking tour because we would both do the speaking tours, things like the Money Show and the Texas road shows, all of those things. And you would see him because he was the go-to guy. He had written books on softs, which was another, underserved segment in the futures market. He was the go-to guy on coffee and cocoa and sugar at a time when those markets seemed so esoteric to many traders and investors. And he really did that. And then, of course, he took it all to the next level when he incorporated that knowledge of that sector, mixed it in with the options trading. So he was an amazing guy. And of course, we also had the dubious honor, or I guess it's not even an honor, a long time ago, my division, we were clearing through a firm that was bought out by, PFG, right? And that was the fraudulent firm. And thank goodness I got a little bit of an inkling that it was time to get out of there. I cut out before it was too late. But yeah, I mean, that was, when James was there, we crossed paths there as well. So we've been together and known each other for a long period of time and really respect him and his work.
James, did Phil miss anything along the journey there? Was there anything you could add?
Really not.
No, there was a bar in Vegas, but we'll talk about that another time. But he did leave
Phil
that
is
out.
being quite kind today with accolades for myself. He's been something I've always looked forward to and looked up to, mostly in the energy market. But I was covering softs and metals. And just as I was getting to know Phil, I was getting to learn energies a little bit better. And he was certainly a great segue for me to get into a couple more commodities that I did. And he was quite helpful for me in that aspect.
Awesome. So, James, talks about before we get deep into energy, let's talk about the intersection of energy and commodities. Tell me how these two sort of things sort of meet at an XY axis.
It's so interesting that people talk about different commodities or they talk about inflation or the price of gold or corn or coffee. So many things start from a barrel of oil. Whether it's planting corn in the Midwest, you have to put energy in the tractor to plant the corn. Then you have to irrigate the corn if it's not raining. That requires energy. Then the tractor has to go out again to harvest the corn, and then you have to dry the corn. So basically, a bushel of corn is, a certain amount of energy. And then, of course, corn turns into beef, pork, or chicken. So many different aspects of what touches the person on a daily basis comes from a barrel of oil. And whether it's corn or cattle or anything else, whether it's driving or heating, so many things start in the Permian Basin in Texas. They take it out, and it's so important to have it and to be able to understand the supply and demand and what the prices might be going forward is so important on so many different aspects.
I think when we alluded to the fact that we started trading futures on oil back in 1983, and prior to that, it really was a dark market, right? When you looked for a price for the barrel of oil, you would basically, call OPEC and say, "Hey, what are you going to sell it to us for?" So it was a very dark, opaque market. I think the futures market opened up the transparency in this market and actually led to a new era of growth. I think it made the economy more efficient. I think if you look at energy markets today compared to what they were, in the 1970s or the 1980s, they're a lot more streamlined, a lot easier for price discovery. So it's been an amazing era. And if you think about the world, what it was back in the 70s when we were so worried about running out of oil and whether OPEC was going to cut off our supplies to where we are today, where, the United States really is the dominant energy power in the world if we play our cards right. We're in a different world now, and it's an exciting world to be in.
Awesome. That's great. So let's talk about this new world we're living in 2025, a new administration. Your first impressions of what a new sort of leadership in Washington will affect, the energy slash commodity market. What are your first sort of like initial thoughts about this new team coming in?
Oh, thank goodness, right? Clarity, sanity. It was kind of interesting because the other administration claimed when they were coming into the power that, thank goodness the grown-ups are in charge. Come on, it wasn't grown-ups, it was more like Whopper Room, right? And we had one of the most disjointed energy policies in the history of this country. We had an anti-fossil fuel energy policy. We had an energy policy that discouraged U.S. Oil and gas production and encouraged oil and gas production in places like Iran and in places like um, Venezuela. This was energy madness, all in the name of climate change being a existential threat. So we're going to put the hammer down on U.S. energy companies. We're going to try to cozy up with Iran and let them produce more oil, and the energy industry's heads was spinning. Right? You're the bad guys. You're war profiteers. You are price gougers. But yet we're going to kiss up to a country like Iran. We're going to kiss up to Venezuela to get their oil. Uh, Getting back to clarity, getting back to realistic energy policies, not spending billions of dollars on alternative energy sources, throwing billions of dollars at the wall and see what sticks. In not demonizing U.S. oil and gas, giving them a plan to do their jobs, right? And not threaten them with social justice lawsuits or we're going to sue you about what you knew and when you knew about climate change, and not stop with the shaming of people who invest in oil and gas and say, hey, you shouldn't invest in oil and gas or we may come back after you. So this madness is going to end, and that's going to be so great for the global economy as well as the United States as well.
Well, Phil, can you explain something for me? Because connect this,
Yeah.
because you've got all the conservative talking points off the top of your head. Well done. But how do you explain that in terms of the fact that the U.S. is producing more crude oil than anyone else in the history of mankind. So
I'm
just
glad
for
you asked
clarity, for
that
someone
because that's
listening,
a Democratic talking point. It's like, you think that, Joe Biden would say, "Oh, good, we're going to produce more energy under me than any president," right? I bet that would go on a bumper sticker. The reality is that the U.S. energy industry produced that oil in spite of the Biden administration. Most of that increase in production came on wells that were drilled long before President Biden was in office. And when we had COVID, we shut down a lot of the wells that were going to be produced under Donald Trump that were capped. They're called drilled but uncompleted wells. So they capped those off because of COVID. When COVID ended, the drillers started to bring that production back online. So if you look at the rig counts of actual drilling under Biden, if you look at the actual drilling permits under Biden, they plummeted, right? Why did production go up? Because of production that was done under the previous administration, right? And the problem with that is that sounds great if that could continue forever. But with the Biden policies, it was discouraging investment. It was demonizing people that were in the oil and gas industry. So that would have led to peak oil production in the United States. Production would start to fall. And then, of course, we'd become more dependent on other countries. Other countries, by the way, that produce oil much more environmentally unfriendly or dirtier than the United States.
Absolutely. We have a very clear proposed oil industry coming up, what the rules and regulations are going to be. I could see the United States probably producing another 1 to 2 million barrels per day. We're probably going to be looking at 14 to 15 million barrels before too long. If in fact we have some peace breakout around the world, Ukraine, Russia, of course, that would be a big win for so many people, as the Russian barrels would then flow to more avenues instead of just going to India, just going to China. That would, I think, alleviate a lot of the bottleneck that's going on right now with global energy. I could see that probably bringing down the price of oil a dollar or two, maybe three. If in fact a peace were to break out in the Middle East, you're probably looking at another dollar or two on the downside as well, really creating an environment where it's a very affordable for the consumer, and yet it's very still profitable to be in the energy business here in the United States. I think there's a chance of a Goldilocks situation where here in the United States, energy producers are making a very good living, and at the same time, the people driving up to the pump will not be alarmed by the prices that they see. I think a really good balance is probably ahead of us here in 2025. Time will tell, but I think that's what it's looking like.
Yeah, I agree. And we focus so much on production, right? And production's important, but it's also about infrastructure. It's about pipelines. It's about, you know, streamlining the permitting process in this country, which we have to do. The Biden administration said, well, we're all for permitting. You just have to go through 15 years of red tape and then you can get something done. That's madness, right? I mean, and even though they say they weren't discouraging things, they were putting up all these roadblocks that really set back America. And listen, forget politics. I care about the American people, right? Right now, we're underinvested in this country in energy. We have an energy crisis ahead of us. We have to wake up and face that fact. The Biden administration kept telling us the future is electric cars. We're going to build all these chargers. We're going to spend billions of dollars and we're going to force everybody to buy one and that's going to save the planet. That's ridiculous. Okay. It takes 4 times as much carbon emission or 3 times as much to build an electric car. And you're building cars that aren't as efficient and that people don't want. You can't force it, right? And you get back to infrastructure, right? I mean, where is the economy of the future? It isn't electric cars, right? It's data centers, right? It's artificial intelligence. It's cryptocurrency, right? These are the things of the future, right? Not getting stuck in some type of transportation mode. Let the market figure out the transportation mode. They can do that, right? But how are we going to power these plants? Is it going to be nuclear power? We need to rebuild this infrastructure in this country. A lot of this infrastructure hasn't been rebuilt in over 150 years. And if we want to compete on the world stage in the global economy, we have to get realistic about energy. It's not about banning natural gas. It isn't about banning your stove. It's about how are we going to power the economy of the future. And unless you want to, surrender and say, "Oh, we'll let other countries do it," go ahead, but not me. And I don't think this administration wants to surrender that future to other countries.
All right, let's talk about seasonal demands because we all Americans could set our watch to come summertime, gas prices are going to go up, then they're going to go down, and then you have this cycle where we all kind of expect the shifts and moves in prices. Going in 25, status quo where it's going to be up and down, and then summer's going to go up, and then it's going to go back down in the winter. Like, let's talk about that.
Yes, you're right. It does. I'm sorry. It's that darn supply and demand thing. It kills me. People drive more in the summer. They don't drive when there's ice on the roads. They turn on their heaters. And there's absolutely no doubt. You can go back 100 years and you can go back 200 years. I've seen charts from the Civil War. The same stuff happened. Okay, prices go up, they go down in the winter. Why? Supply and demand. But I think the bigger picture behind your question is one of the things that we've been missing from the supply and demand picture for the last few years, which has made a major impact on prices, is the lack of winter. We haven't had a real winter. Is it climate change? If it is, I'm all for it. I can bring it on more. I don't have to shovel. I love it. Okay. Or, is it a cycle, right? Are we due, right, for a real cold winter? We look at supplies, and from a market standpoint, I've been kind of like, we dodged the bullet, back 2 years ago with the Russian situation and the diesel inventories, right? And then again, the next winter, same thing. We're coming in really tight. Oh my gosh, there's no room for error. Well, all of a sudden, there's no winter, right? And so what worries me about that is it puts complacency in the market. I look at global inventories around the globe, they're below normal everywhere you look, right? Even in China, where demand's so slow, their inventories are way down. And what happens if old man winter decides to show up, Joe and James? I'm telling you, you could see some price spikes. We saw an early cold front in Europe this year or last year, late last year. Inventories of gas, which were at record highs, dwindled, right? If that continues, for the next couple of months, if we get some real cold fronts, all of a sudden we have an energy crisis in Europe. Let's go back to the situation with Russia. Russia might not be happy with Europe right now. Who knows? If they decide to cut off supplies, you could have people freezing, right? It wasn't too many years ago where in Europe they were cutting down trees because they were really worried about what would happen. And I'm not kidding you, they were. Because there would have been a shortage if we had a cold winter. Mother Nature has smiled on us for the last couple of years. If she stops smiling and we get old man winter, you better watch out.
Aren't we so due for a really cold winter coming up? United States oil supplies are 5% below the 5-year average. So is heating oil. So is gasoline. And certainly, if we finally do get a winter like we remember not so long ago, we could certainly have some higher prices here in January and February going forward. Supplies right now are relatively tight in a lot of different areas. But as you mentioned, we've been skating through some winters over the last 3 or 4 years that really didn't provide any demand spike. And thus the markets have been quite flat. Perhaps this is the year that changes and things go a little bit back to normal. With low supplies around the world right now and here in the United States, we could definitely get, January, February could be some higher prices. We'll have to wait and see.
Nice. All right. And well, Phil, I think, was joking that he loves climate change. But James, as you know, in the world of commodities, climate change, whether it's real or not, let's maybe not debate it at this point, but like it's affecting the world of commodities. So tell me about how we bridge the gap in the commodities and energy where, we want to, drill, baby, drill, but also who knows what effects it's going to have on the commodities market. So how do you thread that needle, James, on your end in the world of commodities?
There has definitely been some weather changes here recently, and what's the cause? I'm not really sure. I know in parts of Africa right now where we watch the production of cocoa so closely, it's been raining and raining and raining in certain areas that they've never seen rain. In Brazil this past year, April, May, June, July, August, it didn't rain at all in locations. And of course, Brazil used to be, just that, a rainforest. It's really been interesting weather this past 24 months. Is it time for it to revert back to what we consider to be normal? It could very well be doing that. But energy it really kicks off the price and supply for practically every commodity that I can think of. When the price comes down, the price of cotton goes up. When the price of oil goes up, practically everybody ability to purchase things at low levels, that changes dramatically. So oil, a barrel of oil is always going to be, at least for as far as the eye can see, the key to inflation and the key to prosperity for people's ability to purchase things at a decent price that they're used to. So having a really stable projection on what production in the United States is going to be. Phil, when's the last time the United States built a new refinery? It just
Yeah.
it's been so long.
It's been, yeah, I think back in the 1970s, and there's still somebody trying to build one from the 1970s trying to get approved. It could come across any year now.
So it's really been neglected. And while a lot of people do want to drive electric cars, they want to have solar panels, I totally understand that. But to think that we're going to be able to do without, fossil fuels, that is just not anywhere near on the horizon. I think also a lot of people who purchase an electric car, and good for them. I think a lot of the people that think about electricity, I think they just feel they just plug that big black cord into the wall, and that's where the electricity comes from. And as Phil pointed out a little while ago, it comes from coal and it comes from natural gas, and you're still looking at fossil fuels. No matter if you're driving a gasoline powered car or an electric car, it still always comes down to energy, and often fossil fuel. Try and make it as clean burning as you can. Try and make the availability as stable as you can, so that people have the ability to drive their automobile cars without $4 gasoline. That's just silly. That's not necessary. And it also brings the price of inflation down if you have a stable energy program. And I think we're on the midst of having one soon.
Nice. And Phil, we talking coal here. What's the future of coal looking like? I mean, do you have stats like are there how many coal mines are there? I mean, I remember coal mines from the old timey movies, but are they still out there? Are there more? And I know there's been this sort of pushback against coal recently, but tell me about the future of coal.
Well, I think we've spent trillions of dollars around the globe, trillions, if not more, trying to get the world off coal. Okay, and let's see how they've done so far. Spoiler alert: global coal demand record high last year. Okay, listen, the green energy policies, they failed. I don't care how many billions of dollars you're going to write up. You got to follow the science, right? You got to realize that coal is going to be here for a long period of time. You just have to learn how to burn it more cleanly, which goes back to another thing, natural gas, right? The most efficient way to replace coal, right? Is natural gas, at least right now, in a magnificent way. Sure, you can build nuclear power plants. It might take you 10 years and $50 billion. So who knows if you can ever get approved. And there's going to be modular plants of nuclear that won't be that big. But, to be honest with you, the United States has really been a leader in reducing carbon emissions. And that was after they dropped out of the uh, Kyoto Accords. This is after they dropped off the Paris Climate Accords. Why was the United States the leader, right? Mainly because we have an energy industry that is dynamic, right? And they understand the challenges. They know them very clearly, probably better than the politicians do in Washington. So they know what they're up against. And that's why they've done it cleaner, smarter than anybody else in the world, right? And yeah, you would like to get off coal. Natural gas is that bridge fuel, and nuclear, of course, which really after Jane Fonda did her movie, China Syndrome, I mean, we stopped, right? It's like, oh my gosh, we could see the core suck into the bottom of the earth and blow up the whole earth. Come on, guys, seriously, but we have politicians making policy off of this kind of stuff. So a big step back, right, to reality. Listen, I'm all for clean energy. I love it, right? But I don't love the government throwing billions of dollars at political donors because they say they have green energy. And let's look at we go back, how many trillions of dollars have we spent on climate over the last 25 to 30 years? How have they done, right? I mean, what percentage is wind for the power? It's rising, it's growing fast. Was it 1%, 2%, 3%? I mean, or solar, right? And does anybody think about solar panels? You know how many toxic chemicals are in a solar panel, right? What are we going to do with them when they disappear? And what about the wind turbines, right? The turbines have a lifespan sometime of a year, 2 year, 3 years. They end up in a landfill because you can't recycle them. And it's like, I know you environmental do-gooders do good. Get it back to weather, right? You know, Listen, are we impacting the climate? We may or may not be, but the fear mongering about climate change is not based in science, right? One of the things we heard, oh, see, climate change, we're going to have, 80 degrees and rising sea levels, and we're not going to be able to produce any crop. All right, guys, we've been hearing that since the 1980s. Did anybody look at the corn numbers this year in the United States? We produced enough food to feed the world probably 6 times over, right? And yeah, we have issues like in Africa, and we have weather signals. We're going into what's called the Gleisberg cycle, which is a 50-year cycle. It's what caused the Dust Bowl, right? So you have, there's so many things that impact climate. So it's very sanctimonious, I think, by a lot of these experts that say, "Whoa, it's because of fossil fuels and these kind of things." Listen, the climate's been changing forever. And if that is an issue, I don't think it's doom or gloom. The world's not going to end tomorrow. We can do this, but we're not going to do it by the type of energy policies we have. Writing checks to poor countries, trillions of dollars, so they can buy solar panels. Let's talk about the benefits of energy. How many people have we saved around the globe with electricity or the ability to turn on air conditioning, right? Or keep hospitals running 24 hours a day, or surgeries. People look at all the negatives, try to balance that with the positives, right? And the only way it doesn't make sense is if you believe, oh my gosh, the sky is falling, the world is going to fall apart, which is Boulder Dash, right? And if you look at every wild prediction made by the climate alarmists, going back to the 1980s, none of them have really come true. None of them, right? And there's a book written by the guy who wrote Jurassic Park, right? He wrote the Andromeda strain in Jurassic Park.
Michael Crichton.
Michael Crichton. And he wrote a book back, I think, in 2005, 2002. They'd have to check the year, but the early 2000s, about climate change is all about keeping everybody in a state of fear, to raise money for universities and to control people, right? And that it was all a crock. And he had all the scientific data. Of course, it was ripped up to shreds by the climate experts like Al Gore, right? Who won the awards for an inconvenient truth, right? No, go back to Inconvenient Truth. Pull out your DVDs out there, folks. You probably don't have it streaming anymore. It might even be on a VHS tape. I don't know. Pull that out. Go listen to those wild predictions about where we were going to be today. Michael Crichton was right. Al Gore was wrong. The climate alarmists were wrong, right? And we spent trillions of dollars or billions of dollars on this fantasy. There's got to be a better way. If it's an issue, let's talk, but let's talk like grown-ups with reality. I don't want to see this energy transition be built on the backs of the poor and the middle class, because that's where it's going. It's going to make energy for the rich and no energy for the poor. It's going to mean high prices of food for the poor and only the rich will eat. That's where we're headed with this nonsense. And you can look at it from the inflation we've seen the last couple of years, right? And we look at the cost of energy and these inefficient energy policies. Who's paying for it? It's not the guys at the climate conference that's eating the big meal. No, it's the poor. Look at the cost of fertilizer go through the roof when you start messing with, energy production. That makes food go up. It makes poverty go up. And you're standing in the way of the production of abundance. So there's got to be a better way, folks. And what we have done hasn't worked. And that's why the American people stood up and said no more. And that's why we're going back to a more sensible energy policy.
I wish Phil was more enthusiastic about
I
this.
get it, really. I know. I tell you.
Yeah.
Okay.
So James, let's sort of connect the two of energy and commodities. So James, with indicators in terms of energy and how that relates to the world of commodities, what are some, if folks getting into the game now or just dabbling in commodities, tell us how the and what energy indicators can sort of lead the way in commodities.
I think what people most like about investing in stocks, real estate, or commodities is understanding what's going forward and not having a bunch of unknowns. And I think now we're in January 2025. A lot of that is then situated now. A lot of people can tell exactly what path we're on. And that allows people who are farming or growing coffee or cocoa or sugar, they can actually implement those ideas into the cost for them producing different commodities. They actually know that they're going to have a stable supply. They know approximately what the price is going to be. And that helps us determine what the price of different commodities will be as well. So not only for the producer, but for the investor who is getting involved with commodities, perhaps for the first time, or perhaps have been trading it for a long time like Phil and I have. But understanding what the input costs are very, very helpful. And I think now that we're in 2025 and there's a more sustainable idea as far as what production looks like and exactly how we're going to move forward with that, allows us to invest in commodities and predict prices a lot better than if we have an unstable idea of exactly what production around the world is going to look like. We have that now, and I think that is going to help us and our investors quite a bit.
Phil, how about you? Any advice for folks, investors getting involved in the energy commodity market?
First, get a physical, okay, from top to bottom, okay? Because there can be some scary moments, of course, that we've seen, in commodities, right? But semi-seriously, you really do have to realize that getting into commodities as an investment can be a lot of ups and downs. There's a lot of ways to do it: ETFs, futures, options. And so you got to remember though that when you're in something like this, it takes risk capital. It's not for everybody, right? That's the main thing I got to tell people. Sometimes I turn down more accounts than I open because I just talk to them, say, this just isn't for you. Go maybe go buy a CD or something, right? Because they have to understand that. On the flip side of that, the opportunities can be enormous, right? They can be life-changing, right? For the right type of investment. And I'm very excited. I mean, I look at some of the moves that we've seen in commodities the last year, the reawakening of the gold market. Gold is an actual asset class. I mean, heck, it was beating the S&P 500 for a big part of the year. When you look at silver, but then you get excited about, the commodities that are in a cyclical undersupplied type of situation. We talk about seasonals, but we talk about production and low prices, and we talk about the challenges of the future. And even though you don't see it day to day in the futures, you can look at copper, you can look at steel, and you're like, you're up and down on short term fundamentals. But you step back and you look at the big picture and say, where are we going to be for 25 years from now? Are we investing enough money in oil today to meet demand 10 years down the road? Are we investing enough, in copper mines, right? Is copper production going to be able to keep up with what is going to be the most explosive demand surge in copper probably in the history of mankind, with the coming energy revolution? So from a long-term perspective, you have to look at these things and see that this could be a historic opportunity. Maybe commodities in one of the best eras since the first industrial revolution, right? So a reawakening of that, and commodities, sometimes come into favor, come out of favor. I think this new year they're going to be back in favors in a big year, and I think they're going to be in that way probably for the next 4 or 5 years because of the challenges that we're going to be facing to meet demand.
I agree with everything Phil just mentioned. There are different ways to invest in commodities. So often, you're talking to your stockbroker and you say, I'm hearing about gold. I think gold's a great buy. I want to buy gold. I want to get involved with futures. And of course, the stockbroker is going to definitely try and talk him out of that. Let's just buy the largest gold mining company in the world. And if gold goes up, you'll prosper that way. And in 2024, we learned that that's not always true. One of the largest, very largest gold mining company in the world, Barrick Gold, was actually lower for the year in 2024 when the price of gold was up some 45%. So investing in commodities is not all equal. You do have to do your homework, and sometimes getting the commodity itself is sometimes better than the company that's producing that product.
Wow. Well, let's talk about 2025 and beyond. So World Bank put out a study that said commodity prices are expected to decline by 5% this year, 2% in 26, and 3% decrease the following year after that. So what does that mean to somebody when they see that headline, commodity prices expected to decline? James, start with you first.
Well, first of all, I wish someone could actually predict that because I would jump on that bandwagon and make that call exactly. Well, it's going to go down 3%. I'm just going to short the entire market. I'll sell options at 40% above the strike price. And if everything is going to be down 3%, we're going to have a great time. And they're also predicting what it's going to be in 2026 and 2027. That's really interesting. With commodities, though, you're diversifying in different sectors. What the price of corn does is not what the price of silver is going to do. What silver might do, cocoa prices might not. The price of corn this past year was actually lower when the price of cocoa actually made all-time record highs. So you need to know your 12 different commodities and trade and invest accordingly. As far as someone making a call on what the change in percentages are going to be this coming year, I think that's a little bit laughable. I don't think that's really possible. It doesn't fall into the mantra of the way we invest in commodities. Each one is different, and each one has its own fundamental value. And that's a great way to diversify away from the stock market or the real estate market. These are actually tangible items, and they don't necessarily go up and down with what the price of Apple stock does. And that's why you're actually diversifying being in commodities and not just buy and hold and hoping that it goes up. So if the price of commodities is down 2 or 3% in the coming year or two, that really doesn't sway the way we invest. We're in different sectors and we trade accordingly based on supply and demand in each commodity.
Cool. Phil?
Yeah, I mean, that's like trying to tell you the weather is going to be 2% warmer next year and 3% warmer than the year after that, and then colder the next year. Yeah, I mean, those long-term predictions, they're nice, they're helpful, but to me, it seems to reflect a bit of either optimism that inflation's going to go away, or on the flip side, pessimism about economic growth, right? I think, to me, and I think I might have read that report, it seems like they were kind of pessimistic about the world going forward, right? Kind of a doom and gloom outlook for the global economy. And we had a lot of that, right? Over the last 4 years, I mean, we had a lot of doom and gloom. Just look at the consumer confidence numbers, look at the business confidence numbers, and that's how we flip back to Trump, right? I mean, the Trump train is just leaving the station, right? And I think, a change, even with the baseball team, a change of a manager when everybody's doom and gloom, like, hey, we're going to lose every game, like you're the Chicago Bears or something, right? Becomes a self-fulfilling prophecy. But then when you have somebody in here with pro-growth policies, right? Tax cuts, realistic energy policies, things that can get the economy going, right? We're not going to regulate the heck out of everything. We're not going to call a penalty on every play. We're going to let you play the darn game. Then you can see this incredible economic growth. And it kind of reminds me, the first time Trump got into office, the stock market, remember on the election, I was up 500 when they thought Hillary was going to win. And then it was, oh, limit down, Trump's going to win. And then people said, wait a second, his policies are really bullish for stocks. Why are we selling? And then we were like, limit up or something by the end of the day. And then we went on one of the biggest stock market rallies in history. I remember I was on with Liz Clayman and they were getting the Trump tax cuts. And And she looks at me, go, well, yeah, okay, this is great, but what is it going to do for the market? And I go, Liz, I think the market could double off of this. And she's like, what? Double? And I go, yeah. And I'm sorry I was wrong. I think it tripled since then, but that's a different story. But the bottom line is that I think if we get back to that, there's a lot of optimism. Listen, I believe in the American economy. I believe in the American people. I know a lot of people are doomsayer. Oh, the debt will never get there. But technology like artificial intelligence can get us there. If we can get through, follow through with this government spending madness and cut it back, get rid of the dead weight in Washington, you're going to have a thoroughbred, my friend. You're going to have the world's strongest economy, lean, mean fighting machine. And then, this doom and gloom about the global economy, we might get ready for a big economic boom, unlike anything we've seen in a long time.
Awesome. So lastly, Phil, it seems like, just judging by our conversation and what's out there, natural gas and gold big in 2025. Is that what you're feeling?
Yeah, I'll tell you, natural gas, it's the best at times, it's the worst at times, right? Natural gas, we've been a product of too much production, right? And the LNG export terminals, the pause, it's really hurt our long-term outlook on that. But yes, I mean, natural gas is going to be the future. Does that mean it's going to have a rocketing price rise? Well, that'll depend on the weather. But definitely, if you want to go out 10 years, I think we're close to a historic bottom.
Nice. James, natural gas and gold, you're buying?
Natural gas is going to be fueling a lot of energy needs here in the United States. I really like what Phil's talking about. I think actually the United States, the economy here is going to be growing over the next 2 or 3 or 4 years, and I think the global economy attached to it is going to be growing along with it. I think that's more demand for commodities, and I see actually the prices going up as opposed to going down. I think we're going to start finding that out here in 2025. That a lot of the pro-growth ideas that are being implemented, they're not going to, take off, the economy right away or propel it right away. But I do see the U.S. growing quite strong in the next 2 or 3 years. I think the global economy will go along with it. And there are 4 or 5 or a handful of commodities that are going to do well, with that in mind. And we're going to be probably getting involved with those right now, actually.
Sweet. Awesome. Well, Phil, it's been a spirited conversation. Appreciate your input.
Thank
Folks
you.
want to find out more about you, follow you along. Where's the best place to start?
You can email me at pflynn@pricegroup.com, and you can get signed up. I do a daily market letter on energy. We do daily technicals on all the major commodities, and we do an occasional precious metals report. So get signed up. pflynn@pricegroup.com. That's all you have to do.
Awesome. And you might also see Phil at your local climate change activism march, I'm sure, right? You'll be out there.
Yeah, I was actually going to glue myself to my TV screen here, to show my displeasure with the environment. But I ran out of glue.
Well, Phil, thank you very much. We really appreciate it.
There you go. You got it. Thank you.